Wow, I'm stupid. Wow. Thank Oh my God, 2 whole minutes. 2 whole minutes there. And I was not checking chat. I was like, oh yeah, I'm organizing and this that. Oh my gosh, thank you all for being here. Jackson's, GJ Money, Dope Echo, thank you. Appreciate you all. But thanks for sticking with me if you're still here. Absolute goonin moment there. But what I was saying is, going to be looking at First Republic stock today. Not going to be talking about GameStop. Obviously, I love GameStop, and I have a lot more I want to say on that, but I'm going to say that for a different day because I only have a limited amount of time right now, and I'm in a different spot, obviously. So lots of different things happening, lots of on the go. So I apologize if you're coming here at 7 p.m. right now and you're like, "Yo, where's Tetron?" Like it's 7 p.m. and his stream's already done. What happened? Like this next month or so, probably going into the start of June. My schedule might be changing a little bit, but I got to do a better job of tweeting it because I literally thought I tweeted it out today, but I waited way too long. Or like I thought I did and I checked and then I was like, bruh, I actually never did. I just thought I did in my head because I was trying to tweet out some other information today because there's a lot of stuff happening, but work is busy. So, also got to be attentive to that. Like I'm in the office, so I don't want to be like on my phone the whole time. So I try to quickly, super quick, but. See, First Republic not even trending. I mean, that's because there's earnings out now. I don't know if it was trending today. I didn't really get the chance to look, but the volume pretty freaking large to start there. Look how large the volume's been since all the struggles started, and this was the period where a massive, massive amounts of deposits were pulled. We got to really see those numbers at their core in the recent 10Q filing for the company. They reported quarter one earnings, which were honestly not good in even the slightest from what I understand. Of course, I'm still trying to understand things to be very clear. I'm never trying to be a genius on this channel or with this Tetron Live, say, oh, I know this, oh, that's going to happen. It's just real time learning because I feel like there's a lot of other individuals out there that also are just trying to learn everything in real time. And if people ask me questions or give me information, I'll learn more, I'll discuss more. It's hopefully beneficial for everyone. But what you see here, like I'm not just going to show you the chart the whole time, these 5 days. So this is since earnings. We have to really see it. It's absolutely crazy. I was watching it today and I was like, wow, is this thing literally going to zero today? Like, I do not provide financial advice and I literally don't know anything, right? So don't quote this, but if it continues its trajectory, at last time, how fast things needed to happen overnight, theoretically, I would think we might hear something by this weekend in regards to what's going to happen with First Republic. Is it going to be bought out? Like, I think at this point, it might just be acquired. Is it going to be broken up, bought out by several parties? More deposits? What's going to happen here? A lot of different possibilities. And also, I'm going to just check chat, make sure everything's looking good. I got to get chat on my phone, on my laptop. Better. Thank God, Jackson's. Thank you. Step-by-step guide. Oh yeah, I was looking at this. I forgot. Forgot about all this stuff. GameStop stuff. But this chat? Nope. Old chat. Okay. Oh, GameStop. Wrong 10K. Or filing. This is just their Q1 filing I have here. But revenues were down 13%. Net interest income was down. Net income was down. Diluted earnings per share was down. But they're like, oh, book value shares are up. And that's the only stat up. Number one, I think that kind of stands out where it's like, okay, why could that be? But it's really how everything's marked. The more I research bank stocks and I'm starting to understand it, it's the value of the assets on the books. So that's why when a lot of deposits are pulled and then the bank has to go sell its short-term reserves, whatever it's the most liquid, theoretically shorter-term bonds, but if they have bad interest rates, or I should say old interest rates, if you bought a 1-year treasury note 6 months ago, the face value, from what I understand, if you needed to sell it right now, would have fallen because interest rates have risen a couple times since then. So when a bank is having a lot of deposits taken out, they have to quickly go sell. So if you look at how far their deposits fell, like, and where I'm going with this, is this right here, their balance sheet really, really stuck out to me. This is before there was any panic induced, and this is when things were just like la di da da, right? Nobody's even suspecting a problem. So this right side here, no short-term borrowings, limited long-term borrowings, loans covering deposits, meaning for 162 billion and it's in thousand here, but it's in billions, or it's in millions, which makes it 162 billion. So 162 billion dollars was deposited as a total, and then they were loaning out 141 billion of that. So if you do that on a calculator, that's like 90, 85, right? 85-ish percent of their funds. So when that's the case, that's like a very large majority of their funds being loaned out. And when the reserve ratio is zero, there's nothing from stopping what's happening now from happening. Where, okay, here things got a little greedier, right? Almost all of their money is loaned out, right? That looks like 90 plus, that's 90 plus percent. That's closer to like 95% of all the deposits are in the form of loans. So they don't actually have a lot of true just cash reserves. And if I'm wrong in some way about this, somebody please correct me. I really am trying to learn. Like that is really the ultimate goal of this live stream. Talking about First Republic Bank. I don't talk about GameStop, but that's really my goal here. And look at their deposits the most recent quarter. So all the turmoil started to happen like mid-March. A lot of people pulling their deposits from First Republic. A lot of media talk about the banks. And people, oh, pull your deposits, bank runs, this and that because of Silicon Valley. It caused a lot of panic. But look at the deposits now, and if you subtract the 30 billion, because that's not included in here, the 30 billion from 11 different US banks, if you subtract that, it's actually only 74.47 billion of deposits that remained from just 90 days filing prior, which is just insane because that was basically a bank run. So many people are pulling their funds. But look, their loans only went up and their deposits went down because obviously the bank deposits from those other banks, they still are valid, they're still there. But you don't think right now people are pulling their money out of First Republic Bank potentially? I mean, that's kind of my thought there. Then look at all these borrowings. They got 80 billion of borrowings, 26 billion. And again, correct me if I'm wrong here, but discussing with a coworker today, we're like, hey, wait a minute. If they just took on those borrowings now, those are well over 4% interest rate minimum. How about the loans they have to make up for that? So theoretically, they have to make larger loans now than whatever interest rate they got it at, and that's how you basically get this net interest margin. So that's already gone down. So they don't, but if you go super high, right, you give someone an 8% loan, that means it's probably not a good business and not necessarily a good loan, especially in the time we're in. It's not like 2021 where everything was booming and coming out of the pandemic and all that different stuff. So yeah, that just reading all this was really remarkable because I realized that would mean theoretically, like just simply looking at this, if you math it out, it's $1.66 being loaned out per $1 in actual cash deposits, like pure cash. But I gotta pull up chat on my phone. Oh, no ways. Did his sound off again? Or I got someone text me. No, I'm chilling. The sound's on. But good looks, bro. I see you out here. You caught me, or you blessed me with the text message. But I was not even paying attention. I was on my whole rant. People were trying to tell me in the chat. People trying to tell me in the text. But never buy a stock that you know nothing about. Thought about buying FRC. First major dip would have been a mistake. Jackson's. That's what it's all about, honestly. Realizing what you could have did, what you would have did, what you actually did. Because I can tell you, somebody who used to really be like Wall Street Bets, that was me. And I was fortunate enough when I was like messing around with all that stuff. I really didn't have a real amount of money to do anything because I was just in school. I was in like high school and early college when I was really messing with that. It's really towards the end of college my perspective started changing on a lot of things, and I actually had to like start paying for things, things that give me more perspective over time. So what that taught me, like in all those random experiences, I tried everything. I tried forex, I tried crypto, day trade, I tried it all. I always used to look into everything, and I was like, oh, I do due diligence. I'm good. I'm looking into what I'm doing. I was watching some randos on YouTube talking about some dumb shit, or just reading some articles, whatever. But my point is, I might have had the same perspective like a couple of years ago. um, I probably maybe would have saw First Public Bank drop. I'm like, oh, they're gonna get this, oh, they're gonna get that, or like, oh yeah, it'll obviously bounce back. Just look at it. But I believe they're also selling stock. I didn't check that part of the filing, but I just kind of saw that and through looking through information or people commenting about it. So I'd have to check on that, but that's never good because a lot of people say, "Oh, well, the stock used to be like here," but you have to factor in the share count. That's always a huge, huge factor. But yeah, I possibly would have did this in the past where I maybe would have just jumped in like, "Oh yeah," but you're right. Do research. That's also why I'm doing this channel to do research and it's really to me here, like I'm not curious about buying First Republic stock or anything like that. It's more about looking what's going on. Like how can the next problem potentially be identified? How to just be smarter at understanding share value because obviously, book value per share, they're having that go up quarter over quarter, but it doesn't look like the stock is reflecting that even the slightest. But recent industry events, as of March 9, 2023, the total deposits were 173 billion, point 5, down 1.7% from year-end 2022. On March 10th, 2023, following the highly public closure of a large regional bank, First Republic began experiencing unprecedented deposit outflows. On March 16, 2023, First Republic received uninsured deposits totaling at 30 billion from a group of America's largest banks. This support for First Republic allowed the bank to reduce its short-term borrowings. At that time, daily deposit outflow had slowed considerably. Deposit activity began to stabilize beginning the week of March 27 and has remained stable through Friday, March 21st, 2023. So basically what they're saying is, the filing came at a really bad time, but everything's fine now. Don't worry. Like it's all been steady since the filing. Total deposits were 102.7 billion as of March 21st, 2023, down only 1.7% from March 31st, 2023, primarily reflecting seasonal client tax payments that occur in each April. It's rough. It's definitely rough for them. Let's see. In response to this, the bank enhanced financial position through additional liquidity from the Federal Reserve Bank, the Federal Home Loan Bank, and JP Morgan Chase. Total borrowings peaked on March 15th at 138 billion. At that time, the bank had 34 billion in cash on its balance sheet. So that's a pretty nuts stat. They had to borrow 138 billion on the spot. Is that what they're saying here? Maybe not necessarily completely on the spot, but peaked. Like it probably happened very quick when you only have 34 billion. That's not even remotely enough to cover it. Total borrowings totaled 104 billion, and cash equivalents totaled 10 billion as of April 21st, 2023. So that's very recently, 5 days ago, because this report just came out 2 days ago. This includes 25.5 billion of long-term advances with the Federal Home Loan Bank compared to 7.3 billion as of March 31st. So 2.5x there. As a result of the recent events, the bank is taking actions to strengthen its business and restructure its balance sheet. These actions include efforts to increase insured deposits, reduce borrowings from the Federal Reserve Bank, and decrease loan balances to correspond with reduced reliance on uninsured deposits. Through these actions, the bank intends to reduce the size of its balance sheet, reduce its reliance on short-term borrowings, and address the challenges it continues to face. Refer to the forward-looking statements below. Suspension of dividends, so they didn't even do the dividend. I mean, that makes sense. Asset quality. Provision for credit losses for the quarter was 60 million. The bank had net loan recoveries of 0.2 million. That's sort of nothing. Book value, cap. Also, I'm going to check chat real quick. I haven't done that in a second. But like I said, guys, short-term stream. Thank you so much if you're here right now. If you're watching this back, I also appreciate that. Just going through information. Let's see. Nope, nothing in chat right now. Nah, we're chilling. Honestly, I didn't expect that many people here because I'm doing this early. I didn't even make a good announcement beforehand. I completely forgot to put it on before. But like I said, thank you for being here. Thank you for watching this back. It's a short stream for today, but just so much going on. And I couldn't miss this. I had to cover it at least a little bit. Loans totaled 173.3 billion at March 31st, 2023, up 3.9%. The increase is primarily due to the increase in single-family and multifamily loans, as well as higher capital call lines of credit outstanding due to the utilization in March. Investment securities as of March 31st were 34.8 billion, 9.8% increase compared to the prior quarter. High quality liquid assets, including eligible cash and uncumberented Cumberlanted? I don't even know how to say that honestly. Unencumbered investment securities totaled 14.4 billion as of March 31st, 2023, and represented by a 6.6 of quarterly average total assets. Deposits. Okay, this is really the big one here. Total deposits declined 72 billion during the quarter to 104.5 billion at March 31st, 2023, reflecting the outflows towards the middle of March. That's obviously when Silicon Valley Bank went under. At March 31st, 2023, excluding 30 billion of deposits made by the large US banks, total deposits consisted of 58.4% checking accounts, 15% in other liquid deposits, and then 26.6% in CDs. So a good majority were checking, and it makes sense, most of it's checking and CDs, and then the other liquid deposits. I'd have to look that up. Let's see if do I have ChatGPT logged in? Let's forget to log in. I hope I'm already logged in. So you just look up some stuff. Let's see. I think I know it. Boom. All right. So this is what I do, guys, as I'm learning with things. What did I want to look up? 30 billion or other liquid deposits. This is what I'll do. I don't know if this is going to work. This is very specific, but other liquid deposits, definition, bank, earnings report. The phrase other liquid deposits typically refers to non-interest bearing deposits held by a bank or financial institution. These deposits can include funds held in checking accounts, savings accounts, and other demand deposit accounts that are easily accessible and can be withdrawn by an account holder at any time. In the context of a bank's earnings report, other liquid deposits may be listed as a category of deposits alongside other deposit types such as time deposits, CDs, and money market accounts. Banks use earnings reports to provide information, blah, blah, blah. The report may include information such as, okay, that's not a great explanation, but it makes sense. It's pretty dry explanation, honestly, because they just non-interest bearing. That's the important factor, though. So a low amount of them, and that was of the 104.5 billion. So only about 16 billion is on interest bearing. So it's interesting stat. I mean, I guess that's some food for thought. I'm not really sure how to take that either way, to be honest with you. At March 31st, 2023, excluding the 30 billion of deposits made by U.S. large banks, our estimated uninsured deposits totaled 19.8 billion. So if you do combine those, though, the U.S. bank ones and the other ones, that's 50% of total deposits. But it's only 27% when you don't include the large U.S. banks. Insured deposits declined moderately during the quarter and remained stable from March 31st through April 21st. Refer to deposit tables for additional details regarding our deposits. Let's see. Do they have that on here? Deposits table. Okay. Might have to pull this up. Let's see. First Republic Bank. First Republic Bank. Let's see. Okay. There's where we go. See the official 10Q. See if there's anything doing there. What a different time. But see, this is good reference from what I was talking about before. Most of the time they loan out less than their deposits. But you can tell where things are at, where they're having a mass amount of loans, but not enough deposits to cover it right now, and hence all those short-term borrowings. Where do we get First Republic investor relations? feel like last time I was talking about First Republic or looking this up, I was having a hard time. Okay. Yes, but I want to see the actual filings. Yes, thank you. Okay. Here we go. I want to see the deposits table. Didn't they say that referred to the deposits table? I gotta see. Deposits table, where are you? I think this is just what I was looking at, right? Where is it? Alright, whatever. I'm just gonna finish going through things. So they suspended the dividend. We had talked about that. Since I do have it pulled up here now. Okay, where were we at? So as of, let's see, our unused available borrowing capacity at the Federal Reserve Bank discount window and FHLB at March 31st, 2023 was 12.4 billion and 1.7 billion respectively. This available borrowing capacity is supported by pledged loans and investment securities. In addition, March 31st, 2023, cash and cash equivalents totaled 13.2 billion. As of March, sorry, keep messing this up. Oh my God. April 21st, 2023, the bank had 45.1 billion of cash and cash equivalents and unused available borrowing capacity, representing more than 2 times our estimated uninsured deposits, excluding the 30 billion of deposits made by the large U.S. banks. I don't really understand why they keep saying that, excluding the large U.S. banks. It still counts. Like, it's still relative. Like, maybe it's not being calculated in for what they're doing, and that's why they're saying, but it's still relative. So it's funny they keep, I mean, it's not funny, but it's interesting to keep wording it like that here. Wealth management, total wealth management assets were 289.5 billion as of March 31st, 2023, up 6.7 compared to the prior quarter, included investment management assets of 118.9 billion, brokerage assets and money market mutual funds of 149.7 billion, and trust and custody assets of 20.9 billion. Wealth management fees, which consist of investment management, broker and investment, insurance, trust and foreign exchange fee income, totaled 223 million for the quarter, up 6.7%. Such revenues represented 18.5% of the bank's total revenue. Following recent industry events and as of April 21st, 2023, wealth management assets from teams that have departed First Republic were responsible for less than 20% of total wealth management assets. Okay, so this doesn't tell me too much here. I'm not that familiar with it, but again, see, here's where I'll go. Wealth management, or what does it say? Wealth management assets. Whoa. Wealth management assets. Whoop. What's up? Negative Benenya. Yo, what up? What up? Hello from Germany and good night from Germany. What up? Thank you for being here. It's a quick, short, but sweet stream. I'm almost done here, but I'm glad you could make it. Thank you very much. I'll catch us in the morning. Just want to say good job. Thank you, sir. Or good day, sir. Thank you. Take care. Have a good night. But finally got my new PS5 at GameStop. OB, what up? Thank you for being here. And that is awesome. That is my favorite place to shop. That is for sure. When I build my computer, I'm going to buy as many pieces as I can from GameStop to make what I want to make work. But inevitably, I do want to get a Switch. I low-key talk about it with my brother sometimes because I love the Switch. If Nintendo could make Mario Sluggers on the Switch, I would buy it in a heartbeat. I love Mario Sluggers. That's like one of my favorite games of all time, if not my favorite, on the Wii. It's a classic. But to get back to it here, wealth management assets refer to the investments in financial assets managed by a bank's wealth management division or subsidiary on behalf of high net worth clients. These assets include stocks, bonds, mutual funds, exchange traded funds, real estate and alternative investments, such as hedge funds and private equity funds. On a bank's balance sheet, wealth management assets may be listed under the assets under management category. This category typically includes all assets managed by the bank's various investment management divisions, including wealth management. Okay. Man, that's not a great definition. But I want to a Switch for Smash Bros. Yo, B, that's also a move. I really low key still play the GameCube and the Wii when I have friends over. When I'm just chilling with the boys and we are just doing nothing, I'll be like, just come over. Or I'll just bring the Switch wherever. I've been starting out to Switch, the Wii or the GameCube, wherever we're going. And It's just great nostalgia, or just nostalgia. And honestly, it's great when you don't want to go out and spend money. I'd rather save some money to maybe buy some GameStop stock because I just love the company. Of course, I don't provide financial advice though. So for that reason, I just like to, sometimes have beers with the boys or whoever's around. Honestly, just like, hey, you guys want to just hang out at someone's house and grab some beers, play some sluggers, play some Mario Super Smash. It's a great move because the bar is just way unnecessarily expensive, but it is what it is. And it's always a good time just doing that, honestly, in my opinion. But let's see, funding. Other sources of funding as of March 31st, 2023 included secured short-term borrowings from the Federal Reserve, securities sold under agreements to repurchase, and short-term and long-term Federal House of Loan Balance. Is that what it was? FHLB, I believe it was up there before, which totaled 105.9 billion. Our unused available borrowing capacity at the Federal Reserve Bank discount window and FHLB as of or at March 31st, 2023 was 12.4 billion and 1.7 respectively. The available borrowing capacity is supported by pledged loans and investment securities. In addition, March 31st, 2023, cash and cash equivalents totaled 13.2 billion. The bank had 45.1 billion of unused. Oh wait, no, did I read this already? Yes, I did. I'm going backwards here. One day I'll build a new PC as well with GameStop parts. It's the wave. Honestly, it's the wave. But as you can see, I'm kind of on the go these days, or like especially as of right now. Or will this light make this better? I guess it's unplugged. Never mind. But until I'm really settled, which when I get a PC, I will settle. But I'm still just trying to work on student loans and organizing my finances in other ways. So when I get there, I'll get there. But sooner than later, and it's like an end of year goal type of thing. So stay tuned. And it's awesome, individuals like me and yourself are trying to not trying, but just like you're trying, or I guess trying is right. We're trying to build a PC or do something, but you're like, hey, I just love this company so much, so I'm gonna go shop there first. And there's so many individuals that think like that about GameStop, and that's just so rare in my opinion, or to see. You just don't see that commonly. Like, oh yeah, so I'm going everywhere. Like a good example of this is Costco. Like I know my uncle's always like, oh yo, I get the best stuff at Costco. Like yo, I just get this at Costco. I just get this. Like he just loves Costco type of thing. So there's definitely people like that for Costco, and I'd say that's kind of a theme. But GameStop has this theme of individuals that just love the company and just love Ryan Cohen, and it's a lot of passion behind it, if that makes sense. But it's not just like, oh yeah, I'm blind, I love it, I love it. Oh yeah, throw money around, I don't know anything. It's individuals who have taken the time to understand it and really know why they maybe have a passion for it. Of course, I only speak for myself, but I'm just saying I think generally there's a lot of other people out there like that. So, but I'm gonna finish wrapping this up here. Then I do got to get going. So net interest income was 923 million for the quarter, down 21.4% compared to the prior quarter. The decrease in net interest income was primarily due to substantially higher funding costs, which was partially offset by CD withdrawal penalties that reduced interest expense deposits by approximately 57 million. So that's not great. They're like, oh, it was partially offset by CD withdrawal penalties. That meant people's CDs that weren't expiring yet, or their expiry date was, we don't know exactly how far out, but because CDs really vary, but however far out it is, there was a early deposit, or I'm sorry, early withdrawal penalty. So with CDs, counting under their deposits, that obviously was not good, and it's not really something to boast about. Like, oh yeah, I mean, I don't think they're boasting about it here, but like, yeah, technically did reduce the interest expense, but that's just not a good long-term thing as a whole because it just shows how many people really withdrew their CDs that they mentioned it like that, where it actually partially offset it. There's enough early withdrawal fees to partially offset it, or make it worth mentioning, which tells me there was probably a lot of withdrawals, which we can see in the deposits as a whole. But I don't know, just another little thought there. The net interest margin decreased 1.77% for the quarter from 2.45% in the prior quarter. The decrease was primarily due to higher short-term borrowings because they had to, quickly borrow at a very high interest rate, which is partially offset by the impact of CD withdrawal penalties that increased the net margin by 11 basis points. So that had 11 basis points effect, I think that's what they're saying there. Withdrawal penalties that increased the net margin. Yeah, so not a huge improvement, but it's enough worth mentioning because, these percentages are like hundreds of millions, if not billions of dollars. Non-interest income was 286 million for the quarter, up 8.7% compared to the prior quarter. The increase was primarily driven by higher investment management fees. I guess that makes sense, just charge more when things aren't looking good to those that are staying. Or I mean, I'm sure I don't fully understand that. See, let's see. Non-interest income. See, sometimes I talk a lot and I'm like, do I really know what I'm saying here? Maybe I should know more. I'll support your company. Nostalgia man, I bought my first PlayStation there as a kid. Hey, that's where it's at. Yeah, I really remember going there as a kid, like being like, oh, I gotta try the games before we go into Kohl's or whatever. I gotta like play whatever they have. Great times. Non-interest income refers to revenue generated by financial institutions not related to interest income earned on loans, investments, or interest earning assets. Non-interest income can provide sources including fees, commissions, other charges. Okay. Fees charged for such various financial services. So you guys can raise your commission earned on investment products, income from investment banking activities, underwriting fees, all that kind of stuff. Okay, that makes sense. So it was 286 million, up 8.7%. So that's not too big of a factor. I think their revenues, what was it again? Like, let's see, 1.2 billion. So that's less than 20%. So it's not too significant. But I think a lot of it was coming from probably fees to like sell and stuff like that are predetermined. So that might not be a great thing or a number that is actually going to stay strong over time. And I'm not trying to be a naysayer. I do wish the best. I don't want to see any kind of banking crisis. I really don't. I just want to see my favorite stock, GameStop, go up and any investment I make do well. And I'm just presenting information as I see it. And it's just alarming what's going on here. I'm not trying to be like negative, like, oh, I hope this happens. Oh, I hope that happens. I'm just like, reality is this is what the numbers say. You know what I mean? It's crazy. But non-interest expense was 852 million for the quarter, down 7.4% compared to the prior quarter. The decrease was primarily due to reversal of previously recognized share-based compensation expense related to the performance-based stock awards. Of course, those still go through no problem. 107 million. The decrease partially offset by a higher FDIC assessment expense of 27 million and goodwill impairment of 25 million. The impaired goodwill consisted of all the commercial banking operating segments goodwill. The commercial banking operating segment is one of the bank's two reportable segments as identified in the bank's annual report on Form 10-K for the year ended December 31st, 2022. The efficiency ratio was 70.4% for the quarter compared to 63.9%. So let's see. The official definition. The efficiency ratio is a financial metric used to measure the efficiency of a bank's operations by comparing its expenses to revenues. Specifically, it measures how much a bank spends to generate $1 of revenue. The efficiency ratio is calculated by dividing a bank's non-interest expenses by net revenue, which is the sum of its net interest income and non-interest income. The resulting ratio is expressed as a percentage. Okay, so if the deposits are changing and everything's changed, like that number really is basically meaningless. It sounds nice, right? Like, oh, it went up 7%. They're more efficient. But if you think about how it's calculated, the numbers that are being used are factoring in all these deposits disappearing. So it's not actually calculating in the right amount of cash. So they're not really efficient, if that makes sense. So that's my interpretation of it there. But bank's effective tax rate for the first quarter of 2023 was 21.2% compared to 20.9% for the prior quarter. Okay, but I mean, it doesn't look like things are going well, so they're probably not even having to pay taxes. When you don't make money, you don't pay taxes. But, I mean, they did have net income, so obviously they paid a little bit of taxes, but I think you know what I mean, generally. Yeah, but I really hope you guys enjoyed this coverage of this. I am going to get going now. This is, like I said, a short but sweet stream. I was really trying to go through some information, and I really feel like using ChatGPT on the side to just look things up. I'm always going to like try and look things up to get definitions and better understanding of things, but I found for myself as an individual, when I'm going through a report like that, what I just did live for you guys right here, as I'm going through things I don't understand, I try and define through ChatGPT, and I try and just understand it better. Because if you just read things and you don't understand it, how does that help you? Obviously, sometimes you have to read things multiple times to truly understand it. But when you have a tool like ChatGPT, why not use it? And people are like, oh, it's going to place jobs, this and that. I'm like, okay, whatever it's going to do, I'm not going to worry about that. I'm just going to find the way I can use this tool for myself. Because to me, it's a tool. And if I can use it to make myself more intelligent and understand things better and just learn, why would I not? But that's my perspective. Thank you guys so much for watching this stream. I really appreciate you all.